While everyone else is busy talking about Elon Musk and Cathie Woods, I'm sticking with the classics because Warren Buffett, he recently released the annual letter to Berkshire Hathaway shareholders. And so in today's video, let's go over everything you need to know in under 10 minutes. He starts off by patting himself on the back by comparing Berkshire Hathaway's stock performance with the S&P 500s. No surprises here. Warren Buffett is considered the GOAT of the investing world for a reason, and Berkshire Hathaway has nearly the double compounded annual gain of the S&P 500. But more importantly, look at the overall gain. The S&P 500 still has an impressive 23,454% gain, but Berkshire Hathaway crushes it with a 2,810,526% gain. And everyone's here talking about how Cathie Woods is the millennials Warren Buffett, but she has a lot to prove in order to live up to that title. And let's break down the numbers of Berkshire Hathaway earnings. They earned $42.5 billion. That can be broken down into $21.9 billion of earnings, $4.9 billion from stocks they sold, $26.7 billion of gains from stocks they're still holding, and $11 billion write-off from a few bad investments. Operating earnings, it did fell 9% because of the pandemic, but Berkshire Hathaway, they ended up repurchasing 5% of their outstanding shares to increase their per share intrinsic value. And by the end of 2020, Berkshire Hathaway's total stock holdings is worth $281 billion, and you can see their 15 biggest holdings right here. From biggest to smallest, we have Apple at the top, and Bank of America, Coca-Cola, American Express, Verizon, Moody's, US Bank Corp, BYD, Chevron, Charter Communications, Bank of New York Mellon, Merck, Itochu Corporation, and GM in last place. And fun fact, Berkshire Hathaway, they have a larger stake in BYD, which is a Chinese electric car maker, than it does of GM. And going back to the letter, Warren Buffett, he owned up to a mistake that cost Berkshire $11 billion. Because back in 2016, Berkshire, they bought Precision Cast Parts, which is an aerospace and defense manufacturer. But he confessed that he paid too much for the company and was too optimistic of its profit potential. And with the pandemic devastating the aerospace industry, the numbers, it didn't meet expectations, but he still believes that the company that they purchased is still going to earn good returns over time. But this is something that we all can learn from. You scroll through YouTube, Instagram, or TikTok, and you see these so-called influencers flaunting their wins, but they keep quiet about their losses. And a great investor like Warren Buffett, he knows that he won't be right all the time. But as long as you're right more often than wrong, you're still going to make a lot of money in the stock market. I know I might not even come close to Warren Buffett's track record, but I'm not afraid to show you guys my portfolio on good days and also the bad days, like how my biggest account, it lost more than $500. I make these videos and show you guys all the numbers, not to brag, but to show you that an average guy like me can still become a millionaire by using the stock market. If that's something that you like to witness, subscribe to stay up to date on my investing journey. And that's all the self-promotion I have right now, so let's get back to the letter. In this section, Warren Buffett, he talks about some shady practices that conglomerates use and how Berkshire Hathaway is different from others. Two big issues that he mentions about conglomerates is that the first, because they like to take a full ownership of companies, it means that there are limited selection that they can choose from because most great companies are not going to be one to be sold. For example, let's say Google wants to buy an electric car company. Tesla sure isn't going to sell themselves, so Google might be left with a bit less desirable companies, like Nikola. And which brings us to the second issue. Now Google wants to buy Nikola. They need shareholder approval, and to make sure that their stock price gets a big bump from this upcoming acquisition, they might end up deploying, deceptive techniques to artificially push up the numbers. Warren Buffett, he goes as far to say that these techniques is sometimes cross the line into fraud. And he's giving us the inside look into Wall Street's obsession with, mergers and acquisitions. So the next time you hear that a company that you're invested in is buying out another company, do your research to make sure if it's a good buy. And if it isn't, make sure to get out before the party ends, or you might be holding business emperors that have no clothes on. Instead, what Warren Buffett tries to do with Berkshire Hathaway is to own a non-controlling portion of a wonderful business because he discovered that it's more profitable, more enjoyable, and far less work than struggling with 100% ownership of a marginal enterprise. And overall, it seems to have worked out great for them, and that's the beauty of stock market investing. as much as we like, we probably won't be rich enough to buy out the company completely. And so the next best thing is to buy stocks in companies that we believe in and love, and we can just sit back and reap the financial benefits as the company grows and returns the profits back to the shareholders. And besides stocks, you can also invest in bonds, but I'm choosing not to for the same reason outlined by Warren Buffett here. He says that bonds are not the place to be these days because of the crazy low interest rates that we're currently seeing. I mean, back in the day, bonds, they did used to provide solid returns, but right now the 10-year treasuries are at a record low, but only gives us 0.93% at the end of 2020, which is already losing out to inflation. And even worse, countries like Germany or Japan, they actually earn negative returns on trillions of dollars of debt. And similarly, the money that we keep in our checking and savings account, they're also losing their purchasing power because you're not able to earn anything in interest. For example, I used to hold my emergency fund in the Marcus savings account, earning 2.2%, which was I think 2 years ago. But right now, you only get 0.5%. With such a low return, it's really no wonder that people are pushing the stock market up because there's currently no attractive alternatives. And things can of course change with the bond market in the future, but right now, I'm sticking with Warren Buffett's plan and just investing in stocks and keeping bonds far, far away. On the next page, we get a truly mind-boggling amount of $138 billion. That's the cash Berkshire Hathaway has laying around to acquire companies, investing in more stocks and to do whatever that they please with. And in 2020, they ended up spending $24.7 billion in their own share buybacks. And they did so because Warren Buffett, he believes that Berkshire Hathaway stocks is currently undervalued throughout 2020 thanks to the pandemic. And he emphasized that while many American CEOs, they buy back their own shares when prices are high, Berkshire, they like to do the opposite and buy low. Remember, buying low is always better than buying high. And speaking of, stock buybacks, they have come under a lot of negative attention lately from politicians like Elizabeth Warren, who says that buybacks are just, market manipulation by the executive team, who use that to butter up the stock price, which ends up in higher corporate bonuses. But I think that's more of an issue because companies, they link the executive pay to stock performances, which does lead to more stock buybacks at higher prices. And we'll see if anything comes from all these political outrage over stock buybacks, but it might be smarter in the end for companies to put more emphasis on corporate earnings and growth and rewarding management team, that way, as opposed to what the share price is doing. Just my 2 cents. And finally, Warren, he touches on the American dream and how anyone who works hard is able to achieve it. He mentions a few success stories like Mary C., who founded C's Candy. Berkshire Hathaway, they did buy out the candy company in 1972. And what started out as a small store in LA has evolved into several hundred stores spread across the whole West Coast. And Warren Buffett, he particularly recommends the peanut brittle, but my gosh, $25 for peanuts? I mean, Warren Buffett must think that we're all billionaires, but he really does seem to love this stuff because during last year's Berkshire Hathaway annual shareholder meeting, you can clearly see the outline of the peanut brittle container here, and here you get a nice wide look of the container. And of course, we see him sipping some Coke. Not surprising because, he's well known for drinking at least 5 cans of Coke a day. But as always, the letter was a great read filled with lots of wisdom. And, it's only 14 pages, so you should definitely give it a read if you haven't. But to go over the main points again, Berkshire Hathaway, they made less money because of the pandemic, but their stock holdings are performing well, and they ended up buying $25 billion back of their own shares. And Warren Buffett, he made a bad call with precision cast parts, but he takes full responsibility for his mistakes. He also says to stay away from bonds because of their current low yield, and to always have money on the side to take advantage of the market, and to never bet against America. I'm taking that last advice to heart and I created a portfolio full of amazing companies that can help me achieve my own American dreams. If you made it to this point and you want to see me grow my portfolio into $1 million one, make sure to subscribe to stay up to date on my investing journey. But with all that said, I think I'm going to end it here. Thank you so much for stopping by. Happy investing. Stay safe out there. I'll catch y'all next time with more shenanigans.